I would now turn to financial stability. The annual financial results of 2023-24 indicate that the banking system remained sound and resilient, backed by improvement in asset quality, enhanced provisioning for bad loans, sustained capital adequacy, and rise in profitability. The non-banking financial companies, that is NBFCs, also displayed strong financials in line with the banking sector. Notably, the gross non-performing assets, that is the GNPAs of scheduled commercial banks and NBFCs, are below 3% of total advances at the end of March 2024. It is important that regulated entities should continue to improve their governance standards, risk management practices, and compliance culture across the organization. In November last year, we had flagged certain concerns on excessive growth in unsecured retail loans and over-reliance of NBFCs on bank funding. Recent data suggests that there is some moderation in these loans and advances. We are closely monitoring the incoming data to ascertain if further measures are necessary. The boards and top management of regulated entities should ensure that risk limits and exposures for each line of business are kept well within their respective risk appetite framework. The persisting gap between credit and deposit growth rates warrants a rethink by the boards of banks to re-strategize their business plans. A prudent balance between asset and liabilities has to be maintained. Customer protection remains on top of the Reserve Bank's priorities. In general, we have observed that the guidelines on key fact statement, in fact, I have explained key fact statement also in the footnote. The customer protection, as I'm just repeating, customer protection remains on top of Reserve Bank's priorities. In fact, it would be of interest to you that in this year's annual report, we have a separate box item which lists out the customer-centric measures that the Reserve Bank has taken. And in the same vein, we have also a box item in the annual report which has just been released recently. There is a box item on the number of regulatory measures which were taken after carrying out stakeholder consultations. And these two box items, I would encourage those who are interested to please have a look at them. So in general, we have observed that the guidelines on key fact statement are followed. But a few regulated entities still charge fees, etc., that are not specified or disclosed in the key fact statement, that is KFS. It has also been observed that in some microfinance institutions and NBFCs that the interest rates on small value loans are high and appear to be usurious. The regulatory freedom enjoyed by the regulated entities in respect of interest rates and charges should be used judiciously to ensure fair and transparent pricing of products and services. The Reserve Bank continues its constructive engagement with such financial entities to safeguard the interest of customers and ensure overall financial stability. Now let me make it very clear that we are observing all these trends, and our focus is always to interact, to engage with the sectoral players, to engage with the individual banks or NBFCs or the MFIs, and encourage them to take necessary corrective measures, because it's for the regulator and the regulated entities together. We have to work to ensure that your health, that is the health of the banks and NBFCs and the microfinance institutions, remain robust, the health remains good, and if that happens and when that happens, it's good for the economy. I'm not saying that there is any big amount of problem at the moment. Overall, as I have said, let me again re-emphasize the banking sector, the NBFC sector, the MFI sector, overall financial sector remains healthy and stable. But there are a few outliers, and I was mainly focusing on them. Let me now turn to the external sector. With lower trade deficit, robust services export growth, and strong remittances, The current account deficit is expected to have moderated in Q4 2023-24. Services exports were predominantly driven by software exports. Other business services and travel services exports were predominantly driven by software exports, other business services and travel exports. The phenomenal rise in global capability centers, that is GCCs, in India has provided a significant boost to India's software and business services exports. India, with an expected 15.2% share in world remittances in 2024, continues to be the largest recipient of remittances globally. Overall, the current account deficit for the current year, that is 2024-25, is expected to remain well within its sustainable level. On the external financing side, foreign portfolio investment, that is FPI flows, surged in 23-24 with net FPI inflows of around US $41.6 billion. Since the beginning of 2024-25, however, foreign portfolio investors have turned net sellers in the domestic market with net outflows of US $5 billion till June 5. In 2023, India retained its position as the most attractive destination for greenfield foreign direct investment, that is greenfield FDI in Asia and Pacific. Gross FDI remained robust in 23-24, but net FDI moderated. External commercial borrowings, that is ECBs, and non-resident deposits recorded high net inflows as compared with the previous year. The amount of ECB agreements also grew markedly during the year. Now, I have given the relevant data in the footnotes. Now, touching a new milestone, India's foreign exchange reserves reached a historical high of US $651.5 billion as on 31st May. India's external sector remains resilient and the key external vulnerability indicators continue to improve. Overall, we remain confident of meeting our external financing requirements comfortably.